Hello and welcome to Chart of the Day Cafe for Tuesday, April 18th, 2017. Disclaimer quickly, trading stocks is a high level of risk and viewers should complete their own due diligence on any stock or underlying that they intend to own. 100% of the content of this video and communique is intended for journalistic and educational purposes only. This video and all indicators, strategies, and articles herein should not be construed as investment advice, not making any recommendations, always for your further homework. Hope everybody had a nice long weekend. It is sure nice to see the warmer weather coming. I've got a little bit of a cold, so really appreciate it even more these days, so bear with me a bit. Let's get into today's video. We always start off with a look at the Russell Index. We use the Russell as our proxy for the markets overall. I really just want to keep these videos super short, and I deem the Russell to be the most rate sensitive index, so that's the one that we go with. We step back to take a look at it on a monthly time frame. So we're looking at the IWM, which is the ETF that represents the Russell 2000. And here is that 5-year monthly time frame. Here's our long-term area of support and resistance, the light blue line. But we're paying particular attention to this little wedgie pattern that's developing here, and the market's kind of chopping its way through it to be resolved one way or the other, we'll see. But note the candle so far for the month of April is red, but we're sitting right at our area of support. We'll see what happens. Here's March, long wick, February, January. So keeping an eye on this area right here. So let's move it away from the monthly to the 1-year weekly and better see how price is behaving. So here's that orange line of, I'm going to call it sort of weekly support. There's the wedge. You can see we fell out of the wedge a little bit, but then price pushed its way back in, and then the last couple of weeks were red, but here we are right here right now on the weekly. We're below our blue 8-day EMA on the weekly, and let me switch it over to the daily. Below on the daily as well, so we will not be putting any fresh charts forward, but you want to know where we are here. Markets look to be getting off to a soft start today. Bank of America and Goldman Sachs both reported earnings. I think Bank of America came in just fine, Goldman Sachs not so much. So keeping an eye on the financials and the transports here in particular to see how they behave, to see if we get the lift off of this area, very important area, and a move up and over that 8-day EMA, or it resolves to the downside. So I think the next couple of days will be kind of important. Having said that, if we do get that lift higher, I want to profile a couple of past Chart of the Day Cafe picks that look interesting to me here. The two past watch list picks that I wanted to highlight for you, should the markets recover today and end up having a strong day, lifting off of this area of support, we're going to use the Russell as our guide, then these two look interesting to me. The first one is OpenText. It's dual listed on the Canadian and US side. We're looking at it on the US side. It was a Chart of the Day Cafe pick way back here, little green circle day. Had a nice run. It's been trading in this wavy pattern, but it had a nice day yesterday. It's starting to look as though it wants to move up and over our blue 8-day EMA on the daily chart. I know everyone has their own way of doing things, but I look for a 3 and 8 EMA cross. It looks like it's emerging. Should this continue this way, I think OpenText looks interesting here. Just as a review, I checked the scores on it this morning. Still really nice high. You know what, Chart of the Day Cafe, it's all about value and growth. So the value score is nice and high, very nice and high. And the forecasted earnings growth is 16% going forward, like that. Also has a current dividend yield of 1.36%. So I'd be keeping an eye on OpenText. We're looking at it on the US side, just as a reminder. The next one is one we featured not too long ago. It's a water utility, SJW Group. We put it forward here. It was consolidating. I like to get in a little early, or I shouldn't say in, but identify my picks early and then wait for the 3 and 8 cross. So it's all about being patient and waiting. So this one had this beautiful lift several days later. It's coming in to sort of consolidate a bit, but it looks like it wants to maybe stay up and over that 8-day EMA. So if this one has a strong day today, I think it looks interesting as well. Again, it's that water utility. Check the scores on it this morning. Still has a nice value score. A forecasted earnings growth rate going forward of 15%. and a current dividend yield of 1.77%. So those are the two I'd be keeping an eye on here. Just as a reminder, I wanted to say if you like these videos, hit the subscribe button on our homepage and you'll be updated when we upload a new one. Videos go out every Tuesday and Thursday morning. Thanks and have a great day.